What about the future of banking reform? Well, we've got an expert, Jim Reichbach. He's a vice chairman of Deloitte Touche, talking about banking reform. Jim, good to have you with us. Thanks for coming to Bloomberg.
It's a real pleasure. Thank you so much.
So what do we get from banking regulatory reform other than just, it seems like this endless stream of proposals? Are we ever going to get anything of substance?
When we sat back in my team last year, we had looked at the fourth quarter as being a time when the regulatory reform would start coming its way out of Congress. And we recognized, I think as many did, that there was a bottleneck of legislation on the Hill that needed to work through, healthcare being most obvious, stimulus package. We're now into the first quarter, and I think it's fair to say it's going to be another quarter, possibly two, before we get some definitive answers.
What do you think? Maybe even fourth quarter 2010. You thought fourth quarter, but you were in the wrong year.
Yeah, possibly. I'd also like to maybe one point for the readers as well, and one of my partners reminded me of this back in the Securities Act of 1940, which was fully 6 years after Glass-Steagall and many more years after that from the Depression. And so I think it's fair to say regulatory reform is not about a silver bullet, one event out of Washington. In fact, it's going to be continuing. More likely than not, will be continuing over the next several years.
So what are the big issues that banks face? Because, they still have to do business whether they get regulatory reform or not. Is it things like risk management control? Is that key?
Sure. If I could I'll reference something that we put together, a Banking and Securities Outlook for 2010. There were really five items that we talked about for the industry going forward, and one of them clearly is risk management, but I'll just kind of go with them in order if that's okay. First is distressed debt. Essentially, the balance sheet of many of the banks are still troubled. The slow economy continues to put pressure on the balance sheets, and particularly commercial real estate, and so that's clearly a big issue for the banks going forward.
Is that moving off the bank balance sheets, or are they waiting for sunnier days?
Well, you have a couple biases that we need to look at both ways. First, as the economy starts to improve, distressed debt, distressed borrowers will improve. So I think that's one. I think second, as we looked at the fourth quarter earnings, you're starting to see many banks. I was looking at the commentary provided by the executives that they're guardedly optimistic that maybe they're at a peak. Obviously, it was very cautious language they would use. As you would expect.
But they are adding to loan loss reserves, right? They're looking over their shoulders, looking at these loans, thinking maybe they're going to have to reserve against them.
There's absolutely still, you saw that in the fourth quarter results. Many of the banks still adding to reserves, and that's not a surprise. But for some of them, it was at a smaller rate than they have in the past. Possibly good news for the future. Okay,
so you got distressed debt. Go ahead.
Sure. The second was regulatory, you touched on. And so, today was a big day early this week with Volcker on the Hill, today with Jerry Corgan and other bankers also testifying to the Senate Banking Committee. And so with the proposals from the House earlier, the Senate debating their own proposals, and now with the Volcker plan and others coming out of the White House, there's certainly a lot going on in the regulatory framework. It's clear that this year we'll see a lot more clarity for the industry as they start looking to the future. One other point around regulatory: recognize that the regulators do have a lot of discretion in the sense of rules already in place that they can leverage. So, for example, we see much higher capital standards. We're seeing the banks putting together liquidity plans. We're seeing discussions around living wills. We're seeing
this is what the ranking minority member Richard Shelby of Alabama was talking about when Paul Volcker came to testify. He said we got a lot of these rules. The question is whether we're going to use them or not.
Well, I think you're seeing the regulators start to use that. You're seeing that. You're absolutely seeing that in the results in the industry. Another example is the guidelines set by the Fed on compensation, and so change is happening. Legislators obviously will set certain rules. The regulators will set regulations and guidelines. But needless to say, it's different today than it was before.
All right, walk us through some of the others. We're talking about distressed debt. You talk about regulatory reform. What's next?
Sure. The next one we use is risk management, to your point. And really, we're looking at what we're seeing different is much more the role of the board and senior executives, essentially risk management and governance at the institutional level. And there are several pieces there that you keep hearing about. The notion of holistic view of risk, looking at all the businesses and products of a particular institution, and looking at that both in terms of integrity, timeliness, the processes around that governance. And so there's a lot of emphasis clearly, and it's not new today. It's been going on for the last year around improving the risk governance in large.
So it's like basic things like trying to figure out what the 24, 25-year-olds on the trading floor are actually doing with the banks and the customers' money.
Well, that gets down to fundamental sets of controls and the use of the information. And that leads actually to the next segue to really the fourth item where we're focusing on. We're really seeing this in the marketplace in terms of the work we're doing with our clients is around information and essentially breaking down the silos in some institutions, improving the integrity, the timeliness, the quality of the information, and obviously the processes around that data so that management can make better decisions.
What do you make of some of the criticism of the banking industry? Says that, look, it's just gotten too big. It's too complicated for any one small group of people to really even figure out what all the people in these global institutions are really doing.
Well, I think that there is a debate around what, too big to fail, and are these institutions, and we've been hearing this debate for many years, are they too big to manage? I think is the other cliche that we hear. It's clear that some very large institutions weathered the storm quite well, and so I think it's more. I think it'd be too simplistic to say it's just about size. I think it is about management processes. It is about culture. It is about a lot of things that make a bank well run or not well run, and I think we need to look at all of that before we make simplistic answers that what size might be too big or too small.
What about number 5? Give us the last one.
Well, I think really looking forward, and I think most importantly is really growth and earnings for the industry going forward. And so for those institutions that are in a stronger position, having come through this crisis, they're clearly looking at opportunities to grow. I'll just use the example of recent acquisitions and alliances. And so there are institutions looking at certain businesses, primarily transaction-based businesses, one good example, wealth management and private banking are another, where organizations are focusing on looking to growth.
And if they're looking to growth, I mean, are they going to just be buying distressed banks? Is that going to be the process?
That's going to be part of it, but that's not what's going to ultimately drive their growth. So there are a few banks that are taking advantage of that that have done very well. There's certainly a lot of private capital available and being organized to go buy distressed debts, be they through the FDIC or otherwise. And so clearly that's something that's going on in the industry in a big way, in sense to the first point of our review looking forward. But that's only going to be a part of it. It's really going to be about investing in their businesses to grow.
All right. I want to thank you very much, Jim Reichbach, the Vice Chairman, U.S. Financial Services, Deloitte Touche, giving us some insight into what's happening in banking right now.